In this video, I will be revealing the best passive income ideas for investors in 2026. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this honest, valuable information for free. Now let's continue. If you've been looking for ways to turn your money into a constant income machine, 2026 might be the year you finally do it right. Because today, we're diving deep into the most powerful passive income ideas for serious investors, the kind that attract wealthy individuals, investment firms, and private lenders. This isn't another side hustle list. These are institutional-grade wealth strategies that build generational income streams. Let's start with the foundation, because every investor who succeeds with passive income starts with one thing: a strategic mindset. You see, passive income isn't about making money while you sleep. It's about building systems that work for you, consistently, predictably, and tax efficiently. And in 2026, that's more possible than ever before, thanks to new opportunities in high-yield assets, digital investing platforms, and income-producing funds. So let's talk about where the smart money is moving. The first passive income stream that's gaining serious traction among high-net-worth investors is dividend growth investing. It's not flashy, but it's the backbone of reliable wealth. In 2026, the best dividend portfolios aren't just built for income. They're built for long-term capital preservation. Investors are focusing on blue-chip companies with consistent dividend increases, strong free cash flow, and defensive sectors like energy, healthcare, and consumer staples. When you reinvest those dividends through a tax-advantaged brokerage account, such as a Roth IRA or self-directed investment fund, you're not just earning yield. You're compounding returns in a tax-free environment. And that's exactly the kind of language high-value advertisers love: tax-free investing, dividend income strategies, passive income for accredited investors. The secret is simple: treat your dividends as a business. Track them, grow them, and let them become your personal annuity that never expires. Now let's move from paper assets to something tangible: real estate income funds. In 2026, investors are turning to fractionalized ownership models, where you can buy shares of cash-flowing properties through digital real estate platforms. These funds typically target a 7 to 10% annual yield and are backed by institutional-grade commercial or multifamily assets. What makes this powerful is scalability. You can start small, diversify across multiple properties, and still enjoy all the benefits of being a real estate investor without managing tenants or dealing with maintenance. High-net-worth investors often pair this with private REITs or tax-deferred 1031 exchange opportunities to shelter their capital gains. The combination of monthly cash flow, equity appreciation, and tax benefits is exactly why this remains one of the most consistent wealth-building vehicles in the world. And here's the key: investors aren't chasing hype, they're chasing stability with leverage. That's how you build passive income that lasts decades, not months. Let's shift gears for a moment and talk about digital assets, but not the speculative kind. In 2026, institutional investors are quietly building digital income portfolios through cash-flowing online businesses, content licensing, and automated e-commerce assets. Platforms that used to be reserved for tech founders are now open to accredited investors, allowing you to own equity in automated YouTube channels, online newsletters, or subscription platforms that generate consistent ad revenue and affiliate income. And the numbers are staggering. Some of these online assets are returning double-digit cash-on-cash yields, backed by real consumer traffic, not crypto volatility. Digital passive income is no longer just for creators. It's now an asset class, and in 2026, we're seeing private funds that aggregate and manage online businesses exactly the way REITs manage real estate. That's where sophisticated capital is quietly flowing. Another elite income stream that's exploding in popularity is private credit investing. As banks tighten lending standards, investors are stepping in to fill the gap, lending directly to small and mid-sized businesses in exchange for above-market interest rates. This is called private debt, and it's becoming one of the most sought-after asset classes for income-oriented investors. Why? Because it provides consistent yields, often 8 to 12% annually, with collateral protection and shorter maturity cycles. It's the perfect blend of fixed income stability and high return potential. And when structured through a tax-deferred account, it's one of the most efficient ways to generate recurring passive income with institutional-level risk management. Of course, every smart investor knows, income without protection is just risk disguised as reward. That's why wealthy investors always build a defensive passive income layer using municipal bonds, TIPS, and treasury ladders. These assets won't make you rich overnight, but they ensure liquidity and preserve purchasing power, especially in high inflation environments. Think of them as your foundation. They stabilize your portfolio so that your higher yield assets can grow safely on top. This is where the wealthy think differently. They don't chase returns. They construct income ecosystems that can survive any market cycle. Let's talk about the tax side, because true passive income is after-tax income. Wealthy investors leverage tax-advantaged accounts, real estate depreciation, qualified dividends, and foreign tax credits to reduce their effective tax rates, often paying less than 15% on their investment income. In 2026, new digital family office platforms are making it easier than ever to automate these tax strategies, giving investors more control over how their income flows and how it's taxed. That's how the wealthy protect their capital, not just by earning more, but by keeping more. Here's where most people fail. They learn about passive income but never act. The wealthy treat it like an investment portfolio, not a dream. They allocate capital across multiple income-producing assets, dividend stocks, private credit, real estate, and digital ventures, all working together to produce consistent monthly cash flow. If you're serious about building passive income in 2026, focus on systemized diversification. Build your portfolio so that every dollar you earn has a purpose to generate more income. And the best part, you don't need to reinvent the wheel. You just need to align your money with proven vehicles that have worked for decades and are still paying top-tier returns today. So, as you plan your next move, remember this. Passive income is not about luck. It's about leverage, patience, and alignment. The wealthy don't gamble on fads. They compound results. They invest in systems that work, regardless of market conditions. Whether it's dividend growth, private real estate, digital assets, or private lending, your goal is the same: build income streams that outlast your career. And that's how investors create financial independence, not just by making money, but by mastering the art of making money work for them. If you found this valuable, Subscribe for more high-level investing insights. 2026 will reward the strategic investor, and your future self will thank you for getting started now. Thanks for watching. Subscribe so as not to miss our next value-packed video. Click the thumbs up button to give us a like for bringing you this vital free information. Comment below sharing a helpful tip on best credit wealth strategies that will benefit others.